Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday. Happy hump day to you all. April 6th, and again, going to be real short and sweet today as there's not a whole lot of news or economic releases scheduled for today. So there is no economic schedule release for today. But stock market's up a little bit. You know, they've both been kind of somewhat steady. I think we're kind of at an impasse where we got a lot of these crisis going on around the world, from what's going on in the Middle East still to the tragedy in Japan to the debt crisis growing in Europe, and heck, we even have probably our own debt crisis going on here, even though it's not making the headline news. But with all that said, I mean, we have bonds. You would think with the government interference with the quantitative easing would be better, which it is artificially doing it. But you got investors like PIMCO who aren't buying in. They're waiting for rates to go up before they start buying, as a lot of this translates to some concerns with inflation. There's a lot of people are disputing with the concerns what Bernanke is saying. As we had his speech, he's kind of painting it more of a rosy economic outlook, but even though the gas prices and everything else are up, so which is kind of preventing growth in a near term from really kind of stunting, as people are spending more money in gasoline, for example, or even food, unless that money is able to be spent somewhere else to help the economy keep moving. And he says long term, it's fine, but a lot of people kind of dispute that. Uh, so proceed with caution with any trading that you got going on here. A lot of stuff's going on, but a lot of uncertainty. Also, some good points I heard yesterday. I was watching while I was working out over at on CNBC. A gentleman was talking about how a lot of people are concerned about regards to the quantitative easing, where they're taking all this debt, but they don't know where that money is coming from to buy all these treasuries and such. So again, where's the money coming from? Are they just printing it out and creating more debt, or declining the dollar even further? So anyways, let's take a look here at the bond market. And we have a bit of a drop here. I do think we'll see this opening gap that came in lower. We had a 37% drop yesterday, so it was a pretty big drop. But we held at the 101.40. We may have had a bond rollover. I'm not really sure, to be frank with you. So which may translate, meaning that this should be actually higher up here. But we have an opening gap. Most likely we'll probably close this gap, I would think, either today or worst case by tomorrow for this scenario. So as a result, mortgage rates are a little bit worse today than they were yesterday, and especially if they didn't have a intraday price change yesterday. So as a result, think about interest rates being a little bit higher today. All right, folks, have a great day.